following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut. Man, how you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, how you doing? Hey, this is Darrell Martin on the Diagnostic Trading Hour. And let's check out where things are heading today. Hopefully you're having a great day. Markets have been moving all around. So first off, let's start off with just looking at where we're at right now on oil. Oil looks like it might be looking to turn around, but it hasn't broken the low just on this recent turnaround. One of the strategies that I like to do is pretty simple, but I trade on 10-minute bars, and I just use a momentum volatility predictor trend line, okay, the MVP trend line. And, again, I focus on the 10 minutes, but when it flips, then I look for within the next 3 bars for it to break the low. If it gives me a short. If I get a short, if it crosses over, I get a short, then I'll hop in short. If it doesn't, I'll stay out of the trade. As you can see right there, kept me out of the trade, did a great job. In addition, we got a flip right over here. It finally does break. When it breaks, there we go. And 3 bars would be the ideal, but it basically has to break that high. I have to see momentum going back in that direction. And I've even seen that work really well, even on just at the money contracts. So I'm not saying it's always perfect and always great, but it's a very simple strategy. And if you can get away with it in the money, that's obviously going to always improve your performance, or at least your results on probabilities. But as you can see right here, we got a momentum volatility turns down. We even have add-ons you can add in as the momentum volatility keeps going and going and going. Oil having that massive drop there, but really, ideally, it's within a few bars. If it's later than that, it just doesn't quite work as well. The longer it takes to get there. If it's the next bar, that's really the best. So that's my preference. Doesn't always work out that way. But you can see, like right here, it busts up. It pulls back a little bit, but then takes off. And even at a 5-minute, they got hit a little bit right there. But then you got a 5 and a 10-minute that both worked out well. So, of course, that was later at the end of the day. So couldn't have taken advantage of that one so much. But I'm going ahead and catching back up to current day on oil, seeing where we're at. We had, let's see, there's not a whole lot. We got a 10-minute, did not break the low, so no entry right there. We got another 10-minute, didn't break the low on that one. Got a 5-minute, didn't break the low, but it did finally turn around. We just now got a flip on MVP, but it has not turned around for us yet. So not a whole lot going on at the moment, just chilling out and letting the market do its thing right there. But at least, some decent movement as far as our high to low. We were right on track. And anyway, so where did it go? It went right up to 1 deviation. That's 1 deviation level right there. It actually busted through. But as you can see, that the path there of the volume, starting to decline as it makes that move. And you don't give up on it yet, but, every other bar there, we're breaking, and then all of a sudden it dies off, and we start getting some casual down closes at that 1 deviation. The move is probably done for the day. So we did it. Pulled on back up. Now it's sort of magnet pricing. Hit the 0.7, moving back up to +1. And let's see here. Pull this up. And let's see if we see the same trend over here on the 5 minutes. Definitely do. So we had that big volume spike right there. Spiked up and ran on up. That was really the only major one we got, but you just see that volume's been declining a good chunk of the day. So But until we got that declining volume where it continued to decline, see, it would go down, but then pop up, and then go down, and pop up, and then now it goes down with the market starting to close down. So wrapping it on up there. It looks like we're popping back up to 103.03 again. Right there. Let's go ahead and let's check out gold. I don't see anything just we can act on right at the moment there. I'm looking on over at the gold market. Let's see what we got. Right here. Okay, so on gold, let's see, we're going into the end of the hour. Volume's just pathetically dead, really quiet right now. It's been really like nothing happening on gold today at all as far as volume is concerned. It's just been oscillating around settlement the entire time. Not getting any kind of commitment. So I'd love to have a trade there, but I just don't see a trade at the moment. That's about as close as we got. I'm surprised that didn't throw off a spike. But let's see, what do we have there on actual volume? 570, 242. Yeah, they've been to 84 or 480, 484. Let's see, yeah. So, oh, yep, there it is. There is a little volume spike right in there. It was hidden. But it hasn't broken the low yet. If this bar did break this low, we actually could have a short trade. So we'll see. We got a few minutes left on that one. We'll see if it moves down. Let's look at what would we do if it did. Okay, so that can be definitely a way to check this out. And we can use different tools that we have, but one of those tools is the simple diagnostic scanner. And let's see here. All right, going ahead and pulling up gold. And let me move this on over here. If it did break it, so you want to get ready. Like when you see that you have either one, a potential one because you see the volume so high, or two, you have a potential one because you're waiting on the low to be broken. Then your next step is to go, okay, well, now that I got that down, that's obvious to me. Now what can I potentially trade to do this? So we'll go up here, we'll click on the binary scanner. And then we'll make sure we got the market selected that we want to trade. And from there, we're going to go look and go, okay, we got 1305, which is right at the money. We also got 1302. Those are really going to be our two contracts. So I can pull both of those up and just have them ready, okay? So we instantly narrowed it down to the two contracts we'd be interested in. Get that chart back up there for us. And then take a look at pricing, okay? And once I got all the pricing up there, I know I had one other ticket. Then it's just a matter of basically being ready for the trade to fire off. Let's see. Let me open this one up. All right. So now we got two tickets. All right. So 1302 is out of reach. Like we would not expect it to go down to 1302 because 1302.5 really is the expected range. And we moved up a little bit already. So really, 1305 is our only choice, and right now we don't see anything telling us to just hop on that yet. And so I'm just sort of watching it to see, but I can definitely tell you I've ruled out 1302, not a viable option. So that's and then the other one is not going to have any kind of, just to show you why we wouldn't also go, could we go higher? We got 1305, well there's nothing in the 1308. So 1308 would be a viable in the money option, except for there's no value there to try to go for it. Okay? So we get rid of this choice. This is now our contract. We're going to watch it. We're going to look at the volume. I'm going to zoom in on it and just try to have as clear a view as possible. We also can flip over. And let me see here if I can pull this up in the meantime. Looks like it's starting to move down, so it may become our in-the-money contract. We're actually starting to get a few ticks in the money right there. You got to be careful on gold, because it can, it can move fast. And I'm just trying to get a bar range on it. So give me 1 second. We'll look at diagnostic bars here in a minute. Check out. And we'll see if there's a potential trade there. If that is the trade I'd be watching right now, that's the only contract that has any value. And out of the money, I love cheap ones as long as they're within my expected move. Sometimes I'll get those on to stupid cheap, super close. And it's a great trade. So something else that I will take a little bit of a glance at now and then is I'll go in and I'll watch the time and sells as well. So let me bring that up just to, sort of show you what it is we're talking about over here. And let me pin that to the top. Right there. Okay, so once that's updating, and we'll get a feed in for gold on this. And let's see, what do we want? There we go. We got gold in here. Oh, I got just copper. Let me bring gold on up. Okay. So that'll start feeding here in just a moment as we get some actual trades going. And I'm going to change a couple more things on another chart. Just watching this one. Notice how it's not doing a whole lot. It's just, like within a tick or two, barely moving on us. We're starting to get some movement, so we could go and we could grab that trade. I don't know if we got it. It moved so fast. So we'll see if we got it. We did get filled on it. Okay. I'm going to be really careful on it. I'm going to manage my risk on this trade because it could easily go against me. So the first thing, my first step is to put in a take profit on the contract. Okay. So right here we got filled at like 31, a little bit higher than where the market's at right now. Okay. So there's the fill on the sell side. And watching our orders flow right here, this is the time and sells I was talking to you about. So we see time and sells flowing over here. And what we need to do is we need to have a take profit in. And looking at the market, the best I'm going to get filled at is a buyback at 4. The problem is the bid-ask spread's about $4 to $5. So if I try to do that, there's not going to be any kind of liquidity when it gets down there. So I'm going to want to take profit before that point. Also, knowing that expiration's coming up in about 12 minutes, I want to get in, take my money, and get out of the trade. I have about a $20, $25 risk on this trade the way it stands at the moment. So why don't we go ahead and try to make about 25 bucks on the trade, 20 to 25. And so if we go for 20, that, exit somewhere around $10. If I sold at 31 and I put an exit at, $11 buyback, okay? And place that order in there. We put it in, so now that order is pending. And so we got to sell at 31, and all this is being managed right there on the scanner for you as well. So we sold at 31. We got a buyback at 11. We're going to take a $20 profit on just a single contract. And I'm doing it on the air, so I'm not necessarily going as heavy as I normally do. But you could do 1. You could do 100 contracts. Whatever. And, of course, I'll want to make sure my risk is managed. If the market does decide to fly back in the opposite direction, then I'll want to have a stop ready to exit if the market were to fly back up, say at 1305, 0.1 or higher. All right, stay there. We'll be back right after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. So we're just watching this simple gold trade, and where the market's moving, where the market's heading. 31 right there, so going short 31 contracts, or one contract at $31. Have a buyback at 11, and this is expecting the market to stay at or below 1305 into the close of 130. The market's obviously oscillating right around that point. We're about half a point in the money, hence the pricing of about $35. It's moving up, moving down, back and forth. And again, we just need to stay, below 1305. It's a really close trade. It's an in the money, but it's basically, it's about as close to at the money, in the money as you can get. And with that, let's go in and let's look at, let's see, I wanted to get one setting over here. Okay, so got bar range, expected range, and okay, cool. So going over here and just looking at a tick-based chart, and I'm watching time and sells. I mentioned time and sells earlier, so I'm watching time and sells, and what I'm doing is I'm watching her to go, what's happening on this 1304 point, 6.7, 0.5, 0.4. So we were ticking a little bit higher. We're starting to tick back lower down now. As you can see, that has a very positive, quick positive impact on our price. This can move really fast either way. So, either you got to use the stop, you got to basically have your finger on the button there. But what you can see right here is we've been obviously in a very obvious downtrend the entire time since this morning, and this really puts it in perspective. If I compare the two charts for you, what you can see, comparing chart A to chart B, this is starting at 9. Let's see, that's 10 o'clock right there. So if we go over here, move this one down for a second, back way up, and you can just see how much clearer the chart is. So this is 10 o'clock versus this 10 o'clock. So we got a couple wicks in here, but you can see how the bars are clearly pointing to the downtrend, and that adds a little bit to the strength of it. Being in a short MVP adds to the strength of it, having a short spike striker. So just putting all those little pieces together is sort of how, just trying to be one step ahead. The market's obviously classified this as a magnet level, just being where, just look at what's happened. It came right down to it, came back up. It's oscillated right around it. Knowing that that's a magnet level makes me even more cautious and willing to hop out of the trade immediately if necessary, simply because, like I said, just look at it. It's up and down all over it. It's been up to 1305.2. It's been down here to 1303.4. It's basically been oscillating right around really 1304.5. Where we're at right now, really, I would say, is the middle, the magnet price. And so we're just seeing it pop up and down. And we'll see this binary move faster and faster as we get closer and closer to expiration with just a matter of ticks. Sometimes not even ticks, sometimes just minutes. We got 3 minutes left. Is it worth it staying in the trade? And now this is where it gets really tricky. Okay? When you have a trade that's, it's close. It's not overly close, but it's still pretty close. Is it worth staying in the trade until expiration? And a lot of traders I know would say not worth it, and they would hop out of the trade. Now, if you didn't hop out, okay, notice I'm doing one because I'm walking you through the trade. If you didn't hop out, all of a sudden it shows you're down a massive amount. Why does it show that? Well, let's look at the contract itself. Okay, because are you really down $62, or is something else going on? Something else is going on, okay? Notice the liquidity is gone from the market. And this is an absolutely essential lesson to learn. The liquidity is gone in these last 2 minutes, what I've called the dark zone, okay? When that liquidity is gone, I'm going to get out of I'm going to cancel my $11 contract, because somebody may fill that thing. It's in the money. They're going to get a free $11 off me, okay? So one of the first things I'm going to do is I'm going to go in there and I'm going to cancel out, saying I don't want somebody taking my $11 order. Okay, so I got rid of that, okay? And now that that's gone, now I can let the thing do its thing. Now it says, oh, you're up $20. I'm like, am I really? No, not really. So, it just keeps going back and forth, back and forth. So the $94, that's other people that bought, and they're trying to sell at $94. Okay? So they're trying to sell at $94. Well, if they get filled at it, then that's great, because if you're buying it, they're selling it to you. And that's why it looks so bad. That's why it looks like you have all this P&L loss, because it's calculating it based on the price that's in there. Okay? It's not calculating it based on what's really happening, because we are in the money on the trade. Okay, at least at the moment. So depending upon where we expire, we'll decide whether or not it expires in the money, and we'll find out right at the last second, I'm sure. Stay there. We'll be back right after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, going back here to the Diagnostic Trading Hour. All right, so what happened with our trade? Well, it went down. It settled in the money. And we had a $100 payout. Does that mean we made $100? No, it does not. We sold it for $31. We got $100 back, which means they put $69 down, and they gave us $69 back because we had to fully collateralize our risk, and they gave us the $31 back as well. Of course, our fees are not included in that payout amount and that risk reward, so you got to, of course, subtract your own fees as well, depending upon what size you do. But looking at the contract right there, we got a $100 payout, which means I got my $69 back, plus I got the $31 in profit for a maximum profit on the trade. Not the best way to trade a contract, but it also is important. That's why I went in with one. I wanted you to see, you know, how the liquidity dries up and disappears in those last 2 minutes. And this is, you know, in the money. I mean, that one's not as in the money as some of the other ones. Let me see here. Let me grab this one. You know, we're in the money by half a point, but it shows we have, like, we're basically at the max worst price that we could be at. And then we have, you know, for almost basically a max loss, which isn't accurate in the fact of what a binary is worth. It's only accurate because what it's doing when it calculates that P&L, the only thing it can do is it can calculate the open price less the current price that's being quoted. So the market price. And the market price isn't from a market maker or liquidity provider. It's just from another trader. Okay? And if that's all you got, that's all you got. So what you want to be able to do is just understand that difference, because people see that and they're like, oh my gosh, how am I down $60? And oh, how did I win? I thought I lost on that trade. And, you know, you shouldn't be staying in on a regular basis anyway. We could have hopped out of that trade. We should have hopped out of that trade. But I thought, hey, you know, this is one of those good opportunities, you know, to show you, you know, what happens in the last minute there. But I was fairly confident the trade was going to expire in the money, even though I don't normally hold it. I'd probably just grab that 10 or 20 bucks that we had that we were up. Be more likely to go that route. But I wanted you to see how that P&L can be misleading as to the true value of the binary in the last 2 minutes when the liquidity dries up. Because at the end of the day, if it's in the money that expires, you're getting full payout no matter what the price says, okay? And you won't normally see that. That's when liquidity is poof. And again, that's about 2 minutes before expiration, so you need to be ready for 3 to 4 minutes before you really want to be ready to hop out of that thing. It could happen as early, by the way, as 15 minutes per exchange-based rules. Liquidity providers can stop quoting. Of course, they want to hedge off their trades. They want to get in and out. They want to make sure they're providing liquidity. They want happy traders because they want people coming in, placing trades so they can make bid-offer spreads, okay? So, you know, they've been really good about it. Sometimes I'll see them take it all the way through. They won't drop out. They'll just keep going. They won't go in and just cancel it out and stop at 2 minutes. But sometimes they may stop at 5 or 10 before. They can. They're allowed to. So you just want to be aware of what the rules are. So if it does happen, you're not like, oh, they're hosing me. It's like, well, actually, no, they've actually been really gracious to give you more than they had to, you know, up to those last 2 minutes. So, and again, sometimes I'm seeing, you know, some of the market makers will come in now and they'll actually quote all the way through, you know, on there. And that's that lesson. That's what we got. So hopefully you picked up a couple extra things there. And let's see. Let's look at where we're at on the markets today. We got the S&P right now is up about 6 points. We got the Russell up 3. NASDAQ is up 24 with the Dow down 9. Let's go ahead and check out our metals where they're at right now. We got copper is currently flat. Gold is, well, as we know, right, flat, down just a point right now. We got silver is pretty flat as well, even more flat than gold is as far as settlement there. We'll get on over at our energy sector. We got natural gas really quiet, barely moving there. We got oil is up 66 cents. We saw that we had a nice deviation, almost deviation and a half move there on oil before it pulled back, just been oscillating around. And let me pull that oil chart back on up. I know we were on that a little bit earlier. And let's hop back over now that gold's closed down. We don't even need the chart anymore, so we can go in here, going over to oil. And once that loads up, we'll walk through it. But first, let's go ahead while we're waiting on that to get all done. Let's catch up where we're at on our ags right now. We got corn flat unchanged on the day. Soybeans, nice day, 1.5% move, up 16 points. We got the pound dollars down 35 pips. The euro dollars down 2. Looking on over at the euro pound, it's up 10 with the dollar CAD up 6. Dollar franc up 1. Dollar yen up 6 pips on the day. The pound yen is currently down 21 pips with the euro yen down 2 and the Aussie yen down 57. Just want to get you your mid lunchtime market wrap on that one. Let's go back over to oil. Let's check out the 10-minute ones. Let's also, after this, we'll wrap up our news plan for the week and get you caught up there, okay? Let me move this out of the way. It keeps popping up over it. And I didn't want 10. I wanted 10 minutes. There we go. Let's see how it ended up on our trend here. It looked like it was trying to pop down, but did not break below. Never broke below. Flipped right back around. And so with that, staying long the entire way there. Look at that. So short, long, never broke it. Didn't break it here. Kept going up. Kept going up. Did not break it for a short here. Kept going up. So that trend line really didn't have to flip at that point. Okay, so with that piece in mind, and we're still long, we're really at the expected movement. We had a little volume up there, so there's a potential trade in the box on that. But we may have to wait a little bit. Let's look at the 5 minutes, see what we got. If we have a spike striker in formation there or not. And I'll probably, just to make sure we get the news, don't have to hop over, start focusing on that piece. But yeah, I mean, that's not a bad short potential setup. What I don't like about this setup is we have both. We have a potential long with a breakout, but we also have a potential short by being at the expected range. And so it's sort of like you look like right here, like it broke out, but at the expected range, and it just went flat on you. Which wouldn't have made for a bad, in the money trade. But even right here, we go up and we got a long, but it's at the expected move. And that's where I think these trades are the most difficult, is whenever they're right at the expected movement, see, at the top of that channel. And we look right here, here we get a breakout, but check it out, we're at a new hour. So we have all this room to move up, and it does come on back down, but that's a perfect entry because we have plenty of movement left in the upcoming hour. So do you have room left for the thing to go? And if you do, awesome. If you don't, then that's going to make you more nervous, because unless you have the volume really justifying it, then it may look like it's going to pop out. It does pop out over here, but then what does it do? It pulls right back. So we're going to sit back on that one, and we're going to get our news caught up, because we haven't ran through that. And Forex factor, there we go. All right, so with that piece, hopping in over here, and let's see what we can do. I'm trying to just pull up our caught up news, but I know we have the Aussie. Let me go ahead and hop over to the Aussie. We had that trade last night, so we'll get that one going on our list. All right, so let's go back and look at yesterday evening, and we were talking about doing a straddle, and said that we were looking for a big move. And I said you could do 9 to 10, you could do 9 to 11, and you could do 6 to 11. And we did not want to risk it more than $40. You could also do an iron condor from 6 to 10. So we had literally 4 different trades that you could do. And I'm going to pull it up right now, and I'll show you what that plan was that we went through, and then we're going to see if it worked or not. So sometimes they do, sometimes they don't, but let's check it out and see how it goes. All right, so with the 22nd, we had first we had an iron condor from 7 to 9. We said we wanted to get a $40. That's a 6 to 8, an expiration of $40. We're looking for an iron condor from 7 to 9. Okay, that was a $20 profit. So right here, if we go into the 9 o'clock hour, grab the low and then the high of the 7 o'clock hour. What about 16 pips? If we zoom in on that time frame, and we go, okay, well, what if you got in right at 7 and then it expires right at 9? Like 5 pips. So if you could have got your 20 pips, then you made 15. Okay? Anyway, so it stayed within our expected ranges. Even if you weren't trading the news, even if you couldn't get your hands on an iron condor, you had a realistic expectation of movement. And that lets you trade accordingly, so you weren't going in for big trends and the thing moves down and you're expecting it to fly, and it's like, well, it's already moved a good chunk of its expected move. Now, what happened afterwards? How high did we go? Right here. So let's just look at the range on that. We got about 57 pips. That's pretty close to a take profit right there. Now, what if you got in earlier? What if you got in at 9? Okay, how high do we go up there? You got 55. Not bad. So that's a 9 to 10. What about a, and I'm just going to take a, what about a 9 to 11? Okay. That's going to give you a 49 pips. And $40 maximum risk, you didn't make a whole lot. But, you know, you basically you got back, you lost 20 on one side, you made 29 on the other, you netted $9. So not a massively profitable trade, but also not just a total blunder either. And let's see, let's go back to 6. Let's look at what happened if you got in as early as 6. That was the earliest possible entry, and let's just say you held it to 11. Then you got basically 40. You pretty much broke even on the trade. So the Iron Condor worked. The 9 to 10 probably worked best because it was the shortest expiration trade. You might have actually hit a 1-to-1 depending upon what your fills were. 9 to 11 made a little bit. 6 to 11 pretty much broke even on the trade if you ended up paying $40 for it. So it's assuming you got a $40 fill price, then at best you're a break even. So now again, if you didn't get filled, you still had an expectation of movement. It moved up like 55 pips. If we say maximum of $40 risk, that means moving 40 pips higher, assuming it was in the middle, than where you bought at. So if it's $40 divided by 2, that's 20. That means we expect it to move up 60 or down 60. Okay? So it moved its expected move. You should not have been adding on to the position. You actually should have expected it to either reverse or go flat. It's exactly what it did. It went flat. It did not reverse right out of the gate there. It just went flat and finally moved on up a little bit later in the Euro session there up to a 1 deviation level, even a little bit higher than that. And let's see where it's at right now on the Aussie. After moving up a little bit above that 1 deviation level, it's back down. But right now we're settling out. It's like at a perfect 1 deviation move on the day. So market acting exactly within the expectations that the market gave us from the implied volatility. We also had the MPC official vote here, so let's go grab that one. And talked about how this is usually a pretty volatile move. We're looking for about a $40 trade. It's a 4 a.m. announcement. And we're looking to get in at 11 with an expiration of 7. How did that work out for us? Good, bad, whatever. Overall, wasn't really just the biggest mover. We got some up move and down move, which is sort of the worst kind. You like it to be, one direction or the other. But let's see how it played out. So let's just assume you got in right at 2,300 here. We moved up how much? About 21 pips. We moved down, taking it all the way to 7 a.m. The lowest point we got on this trade was 45 pips. The expiration value, because obviously if you did pay $40, then you didn't get filled on a take profit, was about 33. So you maybe lost somewhere, maybe a little, somewhere between $5 and $10 on the trade. Entering at 11 for the expiration there. So really not a bad trade. So not a great trade, not a wow trade, but it didn't leave you broke. You got plenty of money to come back with the next day. And didn't take too much, and you more than made that money back on the Iron Condor in the morning. Okay, so that one's knocked out. We also had the CPI. We talked about that. We got the official bank rate. We talked about that. This morning, we had Boeing. It had its release. And then we also had Bank of England Governor Carney talking about 7:45. We said, hey, be aware. And let's see if we have anything else tonight. You're going to have AT&T, Facebook, Gilead, and Qualcomm all coming out after the close. All right? Stay there. We'll be back right after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, going back here to the Diagnostic Trading Hour. And, all right, let's go ahead and look at what we got. We got a whole bunch of year reports coming out in the morning. We got Spanish unemployment, French flash, German flash, Euro flash, PMI. That's really a be aware event. It's not so much a news event that we're trading. We got the official cash rate coming out and the trade balance coming out for the New Zealand dollar. So be aware of that for you New Zealand dollar traders. Be aware of that for you Aussie dollar traders, okay? It's going to happen when the market's closed, so you don't want to hold a position over. Okay, you don't want to hold a position over into that. So even though it's a New Zealand report, it's going to impact the Aussie very potentially on the open. And so you want to be careful about that. You know, when the market's closed, if you're doing like a daily Aussie dollar binary contract, you could see significant movement during that time. Okay, so have that on your thing. New Zealand dollar interest rate reports could impact Aussie immediately upon market open. So that's why that's important. Going over from there, we got retail sales, jobless claims, new home sales, and durable good orders. So let's see what we can get knocked out. We just got a few minutes here. Jobless claims, you're really going to want to look at expected movements, but let's go to retail sales. Let's make that our main focus and see if we can get some progress here on that before the hour is up. Okay, so that report's going to come out, Well, that was the jobless ones. The retail sales one. One more second. I have to pull one more piece of information so I can go through it with you. Okay. So it's going to come out at 4:30 bright and early in the morning. We're looking at a move of 10 pips, 12. We have one big one there. I'm going back to 7. We got 50. We have 35. We got 100. Then we're going to go way down. We're going to have like 3, 6, 25, 28, 50. Yeah, that's going to be one. Be aware of pound retail sales. All right, so put that on there on your report. It can have a very small or very large impact. It's too small when it's small to even attempt to straddle, because you're not going to break even. You're just going to get demolished. It's too big when it's big to attempt an iron condor, because you're just getting nailed. So it can move a lot, but it also can move absolutely nothing, and it's about a 50-50. Either it moves, 50, or it moves 100, or it moves like 3. And just with that balance, it doesn't make it a good news trade. So you want to be aware of the event. Always note, if I say, like, hey, we don't want to trade this one right now, you want to write that down. Hey, not interested in news trade due to, it basically splits, moving 3 ticks, 50 ticks, and 100 ticks equally across the board. And so really just not our, ideal trade. And so that way you just know, and so you don't go back and look at it and go, what was my plan on that? Because I don't think I had a plan there. So you want to have that written down. On the flash manufacturing PMI, China tonight, go ahead and put that on your list. The Chinese flash manufacturing PMI, be aware of, it's coming out at 9:45, okay? So that could easily impact the yen and the Aussie. So if you don't have that one written down, make sure you grab it. We're going to have new home sales in the morning as well. And so, got a regular thing for unemployment claims, just, jobless claims, just watch and see what the percentage comes in at, look at your expected movements, check out any spike strikers. So I would add that to the list, add spike strikers to the list on that as a potential way to do the trade. But for new home sales, I would be looking at a 30-tick minimum income on a 9 to 11 euro-dollar. Enter at 9 for 11 a.m. expiration, 30 pips of profit minimum euro-dollar iron condor. Y'all have a great day. I'll see you tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.